What's up, everybody? Welcome aboard to Trading with Bubba. And, apparently, the markets only know how to go higher. Look, what can I tell you? This is this time of year. The B team is in. All the professionals are out and off for the next 10 days. And basically, we're seeing pretty much directional, straight up kind of action. As we take a look first at the futures markets, okay, you can see the Dow is going higher, the Russell's going higher, the Nasdaq's going higher. Everything's going higher. Crude oil is going higher. Bonds and notes are going higher. It's an interesting dynamic here, what we're watching. Certainly, if I was looking to do something, there would have been a potential trade here in the euro currency, but I didn't take it because I knew I was coming here. But overall, as we look at the bigger picture, again, take a look at the stocks we watch on a regular basis. Apple, still kind of churning, trying to work its way higher. Amazon exploding higher, right? Coin going higher, and amazing. Okay, and again, there's no reason for you to try to get in front of this or say that it shouldn't go any higher. There's not a logical reason why the markets are going higher, but at the end of the day, they're going higher. So why should you get in the way? Why fight it when it's better either to participate with it or to just observe? If you feel that you can't get long in this market as a trader, then you're better off sitting on the sidelines because everything is kind of going higher. Okay, it doesn't really matter what you look at; they're all kind of trying to break out to the upside. Microsoft is still in consolidation, but higher. Nvidia is trying to break. It failed at 500, which is a natural spot for it to fail from, but still looks really good. The Qs continue to try to push higher. Look, they're going to break another level. The Square continues to push higher. Looks like it's going to resistance. The S&P, the spiders continue to go higher. So again, I mean, we can fight it or we can just let it trade. And I think the best is either find a place to participate or let it trade. I think that, again, if you want to do some things that are, not real safe, but relatively safe, you sell some premium, you sell some credit spreads. Right now, I'd be selling call spreads into the rally. Yesterday, you saw how we ended the day with a late day sell-off. But again, there's not really a lot to do right now. Again, volume is half of normal. I'm going to take it back here for a minute. If you look at the overall volume here's the futures market, which is where the volume always lies. Yesterday, volume was half of normal, and today looks like it's not going to reach yesterday's volume. Nasdaq, half of the yesterday, and it doesn't look like we're going to reach yesterday's volume. Russell, again, there is no volume, which means there's no action, which means there's no real two-way trade. And without two-way trade, we make our money on two-way trade. We make our money when there's buyers and sellers pushing them up, pushing them down, and giving us opportunity. Right now, with the market just going basically straight up or parabolically higher, it's a very big challenge to try to make any real dough here. Okay, you're really putting yourself at risk. And just for an example, this morning in my day trading group, we had 3 trades. Okay, 2 were winners and 1 was a loser, but the loser was as big as the 2 winners. So again, you're fighting a battle here, which normally at this time of year I wouldn't be here. I'd be off. If I was on the trading floor, I wouldn't be trading right now. Okay, I would be on the golf course or whatever. But at the end of the day, this is what we want to look at. Now you're starting to see, and some other things to look at. Look at if we go to a weekly chart. I'm going to bring you to a chart here. Hold on. Okay. So we go to a weekly chart. Okay. Take a look at the NASDAQ futures. Okay. Now, if you're not familiar with what this pattern is, this is known as a cup and handle. And this is a cup and handle in an up market, which is very powerful, which means that there's still probably some more room to go to the upside. Now, I'm not saying they won't go down. I'm saying that the probabilities say that we're going higher. Okay. Now, I would think if I were, and I'm not going to try to time the market. I don't have a crystal ball, but if I'm looking at this, I think we'll probably go higher until the first week in January. I think January will tell, as it always does, a story. But you should expect to see some buyers right after the first of the year. But there's where, if we get this into some heavy volume and a kind of what we would call the blow off to the upside, which is straight up, in this case, what I'm looking for, straight up price action with heavy volume, to me, that would be an indication that it might be time to start to look to sell. But when you're dealing in a market that is a lack of volume, there is not a lot of reason to get overly involved. Again, I think right now your best bets are, looking at the cues and saying, okay, so where is my resistance? And here we are. We're here right now. Okay, so I would look to potentially sell some credit spreads here. Maybe sell the the 409 or 49, 409, 410, 409, 411, or 410, 411. Again, you're not going to make a lot of money, but it's a relatively safe trade based on the fact that we are at consolidation. Okay, so it gives you an opportunity if you want to play. And I'm not suggesting that you play or not. I mean, if it were up to me, I would tell you to take the day off. All right. And again, spider is the same thing. 475, 476. Again, that's the area that looks to be some resistance right now. So those are areas that if I were going to look at, and I probably will sell some spreads, even though I'm going to leave in a little bit as soon as we get down here. But at the end of the day, markets are markets. And I think that you just have to recognize that, if you don't think the markets will go any higher, who would have thought that they'd be where they are now? Okay, I don't know anybody who would have guessed that we'd be at these levels now. I mean, this is kind of ridiculous when you look at it from a logic standpoint. I mean, the market, to me, nothing's in real good shape yet. Here we are. Okay, so do you think that we have room to go higher? Well, guess what? There's always room. Okay, it's got nothing to do with what you hear, the rumors of there's money on the sidelines. There's always money on the sidelines. Right now, the tape says the markets are going higher, and either they're pricing in a rate cut that is going to happen or not going to happen. But very often, these type of situations, the markets, I think, are overpricing what they think is going to happen. If you've ever heard the old story, buy the rumor, sell the news. Okay, and I think this is an opportunity to buy the rumor, which is that there's going to be rate cuts, but be prepared to sell the news. But again, there's absolutely no reason to get involved in trying to fade or fight this market here, because at the end of the day, it's going higher, and it goes higher almost every day. So why would you want to get yourself involved in a market that is giving you nothing but grief at the moment, when you can just simply either sit it out, which is what I would look to do, okay, or so try to sell some credit or some premium. I think that is really more the case. I mean, you're watching, gold is starting to take off now. Now again, is gold going to be, is it going to be able to sustain and really break out and go back to the all-time highs? Maybe. I mean, this is certainly held where it should have. It's going to break big one way or the other from right here. Silver starting to rally a little bit. Same story. Is it going to break to the upside or break to the downside? You've got all kinds of reasons that, Costco, for example, sold last quarter $100 million worth of gold bars. Now, that doesn't sound like a lot, but that's Costco. They're not even a gold dealer. Okay. So, again, I think that the markets are coming near the end of this rally. But again, near and there are relative. We could rally another 10% before the tops are actually put in. I mean, I would expect that, again, the first or second week of January, I would expect a blow off to the upside, in which I would then want to take a short position, either be short term or longer term. But I would start obviously with a short term position, because again, I don't want to take X amount, too much risk. This is a risk-based business. Okay. But you're looking at things that are going on here that, here, look at the VIX. Now, the VIX has not been as weak as one might think with the market going straight up. You would think the VIX would be lower, but the VIX has apparently might have found a little bit of a bottom. And so if you're doing anything right now, one of the trades that I'm using right now on longer term scale is I'm putting in a neutral double diagonal, but I'm weighting both sides. But it's a dead neutral trade. What I'm really doing is I'm buying volatility in the future, looking for a pop or a spike in volatility over the next 6 weeks. Okay. I might have to reset that trade again later, but that is really what I'm playing for. I'm taking basically neutral positions in which I can help them finance out themselves by selling weekly premium against a longer term position, or in the SPY and the Qs case, sell daily premium. Okay. And then looking to make a move. But again, I'm looking for a spike or a pop in volatility, especially now that it looks like we may have found a temporary bottom. But it's the markets right now, you'll never find a more challenging market to trade than you're watching right now. Okay. This is a market that, again, it's the time of year. Okay. It's naturally more bullish, and every year that I can remember, except for 2018, has been bullish. It's extremely thin. So if you can get trapped easily. The bid offer spreads, if you're trading options, are a little bit wider than normal, because again, there's not enough business to say that we want to get crazy here. Okay. And that's, remember, we're looking at volume and price, which make up one of our trades. So if we go back and see, let's bring it back in here and see if there's anything worth looking at here. So we're getting some straight up spike price movement, but we're not getting any volume to tell me that, hey, this is a good potential trade or a blow off spot, because of course you can see that the markets aren't giving me any volume to go along with the price action. So what would make me think that they're going to sell off without a panic or without some emotion to the trade? The trade is very unemotional now. It's very matter of fact. And when you see a market like that, it is best, like I said, either to join in. Okay. And I'm not telling you, listen, it's hard to want to buy and get long here. Okay. But the right trade here is either to get long with the market or sit it out. Shorting is really not an option unless you're using some very good support and resistance levels and looking to really sell premium and not looking for a big move in direction. I think this is something that you always have to remember. You know, again, if we see a trade, I'll make a trade with you guys if there's something shows up here, but I need to see a spike in volume. And we're not seeing that, and I don't expect to see it. But again, as you look, you'll see most things are higher, especially what do they call them, the Magnificent Seven or whatever, or 8, whatever the AI stocks are. But commodities are weak. There's just nothing that says to me to get excited about this. And so rather than try to force myself into a trade, I will wait and I will watch patiently. But you can bet your ass I'll be playing poker this afternoon. Okay. Well before the market closes, because again, there's really nothing for me to do here. And one of the problems I find with most traders is the more you sit and stare at a chart, the more likely you are to see a mirage of a bad trade and put yourself in a position that is not where you really want to be. Okay. And I think these are the kind of markets that you sell a little credit, you sell a little premium, and you walk away. You know what your risk is. You don't have to do anything about it. You can wait till the end of the day and either take the premium or cover, or if you're doing weekly, again, whatever time frame that you're going to use. I do some dailies, on the SPYs and the Qs, which I will do today, assuming that, they'll peak. And again, not that they have to, and they don't have to go down. They just can't keep going higher. And I'm willing to take that risk based on where we are. And I'll find a level that I like. And of course, again, I'll go back and give you the levels I'm going to use right now. And in the SPYs, actually, I can show you IWM too, because IWM I can use tomorrow's if I want. IWM I'd use like 201, 203 as a call spread I would sell. Okay. And I, obviously want to get as much credit as I can, but I'd like to get about 60 cents for that. The Qs, I would use, like 409, 410, 409, 411. Again, and that's for today's expiration. And the SPY, I'd want to use, 475, 476, 477, something like that, right? I want to sell a little bit closer to the money and get the premium. And again, let's just see what we can get real quick here. If we pop it up here, wrong window I want, this one. Okay. So if we look at the SPY, SPY, Okay, let's see, trade. And so for today, if we sell the 475, yeah, so like the 475, 476, 23 cents. It's a little light of what I'd like to get, but I might take the chance, okay, because I am protected to 475.23, which is about another dollar higher in the SPY. Again, I usually like to get 40 cents per dollar, but again, I'm dealing in 0 DTE, so it's something to look at. And in the Qs, let's say 410, there's not enough there. I'd have to go to the 409, which I probably wouldn't want to do at these levels. We're too close. Okay. 409, 410 is 36 cents. Again, it's 36%, but it's probably a little bit too close for me to want to try that right now. I need a little bit more evidence that the market was going to turn around and go back the other way. And IWM, which would be with tomorrow's expiration. And let's see if we looked at the 201, 202, 25 cents. Yeah. Again, this is like you're really giving up some risk here. But again, it may be worth it again. And that's only if you want to get involved. I am not encouraging you to do so. I am telling you that, I'll put these on because I always put them on, but I'm not going to sit here and watch them either, though. I mean, I'll check at the end of the day and see if I have to make an adjustment. Okay. But again, the overall markets they're working their way higher. So why should I try to fight with what is evident right in front of my face? Okay. We all think we know more than we know, and markets are markets. And for now, they just want to go higher. And I mean, if you've watched you see not even any real breaks. Okay. They basically, if they pause for a minute and then they charge higher. Now, again, charge is a relative term because there's really no volume. So, but they are working higher and pretty much across the board. I mean, just look down this board here. Everything is green. There is very little red here. Okay. And the only red is NVIDIA, which was up big over 500, and Microsoft. Other than that, everything is to the positive, unless in some of the futures markets. So again, why would you want to fight that? I mean, think about it. Why do you want to put yourself in jeopardy when there's really no reason to do so? The markets are going to be here. The markets are open 241 days a year. Okay. There's plenty of opportunity to trade and not have to get involved in what I would call a very crappy situation of a market right now, which is, again, is just not driving itself higher, but working its way higher. And it's doing it very soft and very gently. And let's just see if anything shows up here. And again, I can't really make a trade. I've traded with you guys many times before, but there's not a trade to make. Look at the declining volume from the open to where we are now, and every one of the major indices. Okay, so where am I going to get any advantage? You can't. Okay, anything I do here is going to be a guess. And if you're a sports fan and you bet on games, you would have seen that the Old Dominion Western Kentucky game yesterday after up 28-0 and then lost the game. You got to make yourself wonder, why do you want to gamble, right? And this is, if you're taking shots here that are with open-ended risk, you're really just gambling. And I don't think that pays. I think that's more of a mistake. And I think you're better off being patient and waiting and looking for some spot opportunities. So for today, if you want to do anything, I would sell some credit spreads, if at all. And I'm not recommending you do anything, but if I were you, that's what I'd be looking for. Some low risk entries that I could just take a little bit of credit and I don't have to worry so much about direction as long as it doesn't go skyrocketing against me. We'll see you back here on Thursday. Everybody have a great day and be careful, and we'll see you back here Thursday.